Now we'll start with the third part of this chapter, which is also very much important. Okay, it is your EVA and MVA. Okay, so what is EVA? EVA is your economic value added, and MVA is your market value added. EVA was coined by the US consulting firm named Stern Stewart and Company. Okay, so they derived a formula called as economic value added. Okay, so they derived the formula and they have patented it. Okay, so anytime we use the EVA term, their name has to be used alongside it. Okay, so who invented the formula? It was US consulting firm Stern Stewart and Company. Okay, now the question arises is, what does it do? What does EVA do? EVA measures a company's financial performance based on excess return earned by the company over minimum required return. Okay, so what is a company's minimum required return? It is your KO, that is your overall cost of capital, right? So which means what? It is the required return of the investor. Okay, so the excess amount which is earned by the company is called as EVA. Okay, so EVA is what? NOPAT. Okay, why are we taking NOPAT here? Because NOPAT is what? NOPAT is your EBIT minus interest, right? Okay, EBIT minus interest is your NOPAT. Sorry, EBIT minus your tax is your NOPAT. Okay, so this amount NOPAT is attributable to all the firm, full company. Okay, so to equity shareholders and debt holders also. Okay, so that's why NOPAT is being used here, minus invested capital into WACC. Okay, what is the invested capital? Invested capital is your shares. Okay, shares capital. See, there is a separate formula for it. We'll see. Okay, so what it is? Equity shares, that is the capital employed in the firm. Okay, so that is normally called capital employed. Here they have given a different formula. We'll see later in this chapter. Okay, in this part. Now, how to calculate EVA? I have told you earlier that it is NOPAT minus invested capital. Okay, that is a capital employed into WACC. Okay, so NOPAT, how is NOPAT need to be calculated? Okay, so NOPAT is EBIT. Okay, if in question they are given PAT, okay, then you have to do reverse calculation and get to EBIT. Okay, so EBIT minus your tax on EBIT, that gives you net operating profit after tax. Okay, plus you do non-cash expenses. Example, provision for bad debts. Okay, this is the only example that is there in one sum. We'll see that. Okay, so this is the only example. Non-cash, any non-cash expenses, we have to add it. Okay, so we'll get what? We'll get adjusted NOPAT, right? So this adjusted NOPAT we'll use in this formula, right? NOPAT is formed here. Now we have to find invested capital. Okay, so before that, if in question EBIT is not given, okay, so what you have to do? If PAT is given, okay, PAT is what? Your net income. Okay, if in question net income is given, it means your PAT is available, then EBIT can be calculated as follows. That is by reverse calculation. First we can find PBT. Okay, so PAT divided by 1 minus tax rate. So let's suppose your PAT is 1 lakh. Okay, and your tax rate is 30%. So 1 minus T is equal to 0.7, right? So you'll get 142,857 as your PBT. Okay, plus interest in expense, let's suppose it is 20,000. Okay, so you'll get the amount as EBIT as this amount. Okay, then minus you have to do tax, minus 30%. Okay, so this is your NOPAT, right? Now, in one question, this point is very much important. Okay, financial leverage is available. Okay, so what is financial leverage? Financial leverage is your EBIT divided by your EBT, right? पहले वाला figure to बाद में वाला figure, right? So what does financial leverage tell you is that how much can you take? Okay, how much earnings are there to manage the interest expense. Okay, so EBIT divided by EBT is your formula, right? See here, EBIT minus EBT or EBIT minus interest, right? EBIT minus EBT, right? So using this formula, we have derived this, that is financial leverage into interest expense and financial leverage minus 1. Okay, so how is this derived? Okay, we just have to calculate it by doing cross. Okay, this EBIT into interest will go up. Okay, divide by, okay, using this formula we'll get, so simply we have to just remember the formula. It is what? Financial leverage into interest divide by financial leverage minus 1. Okay, let's suppose your financial leverage was 1.25. okay, 1.25 into your interest expense, let's suppose it is 20,000. okay, divide by financial leverage minus 1. So means what? 1.25 minus 1, that is 0.25. So we'll get the amount as 1 lakh. Okay, so what we'll get? We'll get EBIT, right? Because financial leverage is equal to EBIT upon EBT. Just keep this in mind. Okay, financial leverage into interest expense, okay, divide by 1 minus financial leverage minus 1. Okay, next, invested capital. How do you calculate invested capital? Invested capital is your equity shares plus reserves and surplus. Okay, it is like your capital employed only plus long term debt. Okay, up till here we had in the capital employed formula. Yes, now just two things are added back. Okay, so the first one is intangible asset, example patent, which is not recorded in the books. Okay, your equity shares plus reserves and surplus is also equal to your total assets minus your total liabilities, right? So if intangible asset is not recorded in the books, it will come in the asset side, it will be included in the asset side, so that's why we'll add it here. Okay, so add intangible asset plus any non-cash adjustment done in NOPAT. Okay, example provision for bad debt. Okay, plus non-cash expense. This is very much important. Okay, you have to add back the non-cash expense. Okay, non-cash adjustment done in NOPAT, any non-cash adjustment. Okay, we'll get invested capital, or the other method, total assets minus current liabilities plus intangible asset plus non-cash adjustment done in NOPAT. Okay, it is the same formula only, it is just different presentation. Next we have is other points related to EVA. That is, a company having higher EVA is considered to be best for investment. Why is it? Because EVA denotes what? It is the excess of NOPAT. Sorry, it is the excess of your required return, right? So the more excess return you have, the better is your company. Okay, so whichever company is having higher EVA, you will consider it as best. So EVA dividend means what? This extra portion is distributed to the equity shareholders. Okay, so EVA divided by number of equity shares, very much easy. Okay, if it is asked in question, you can do it. It is the amount of dividend that the company can pay before its value starts declining, because if company does not pay any dividend, then value of firm increases. Since amount can be used for investment, which will increase EBIT growth. Hence, if EBIT becomes higher, value of firm will also increase. Okay. So it was basic only. Okay. Next we move on to the topic. It is MVA, that is your market value added. What is market value added? Market value added measure was also given by the US consulting firm only, Stewart and Stern. Okay, so what it is? It measures the wealth that company is able to create for its stakeholders since its foundation. Okay, so what it is saying is that the wealth that the firm is able to create, which means what is the ultimate wealth that a firm can create? It is the value of the company in the market, right? So minus your invested capital in the firm, so you'll get the amount. Okay, so market value minus your invested capital, you will get what? MVA, market value added, right? Because invested capital was the expected return by the shareholders, okay, by the equity holders, so by the stakeholders of the company. So my market value minus your invested capital, you will get market value added. Okay. So invested capital, what you will use? You'll use the same invested capital which you used for EVA, right? So what is the invested capital? It is equity plus reserves and surplus plus long-term debt, okay, plus non-cash adjustment, example provision for bad debt. It is a non-cash expenditure. And next, your intangible assets, right, which is not recorded in the books. If it is recorded in the books, you should not add it back. Okay, this is the rule. Next, if market value of equity shares is given in question, okay, if market value of equity shares is given in question, then what you will do is that you will just find the MVA of market only, of equity only. So market value of equity is equal to MPS into number of shares minus your shareholders funds only, not the total funds, but the shareholders funds. That is your equity share capital plus reserves and surplus. Okay, if you minus it, you will get MVA, right? Calculation of value of firm using MVA. That is, how do you calculate MVA? Just use this formula. Okay, just reverse it. So how is it the value of firm? MVA plus invested capital becomes your value of the firm, right? And how do you calculate MVA? MVA is PV of all future EVA using WACC. Okay. Ultimately, your MVA should be the PV of all future EVA only, no? It should be your MVA, right? So we'll see questions of it. Okay, I've explained the topic. Topic is just small only, but there are some questions. Okay, almost 10 questions are there in the question bank. We'll see it. Let's look into the questions. Okay, so economic value added, question number 20. Okay, RST Limited's current financial year's income statement reported its net income after tax as 25 lakhs. Okay, net income means what? Your PAT is given here. Okay, 25 lakhs. After the applicable corporate tax, income tax is 30%, right? So we have to do reverse calculation now. Okay, debt coupon rate is 11%. It is 40 lakhs. Equity is given here. Invested capital is given here. Directly invested capital is given. We need not do anything. Following is the data given to estimate the cost of equity. Okay, so equity beta is given and risk-free rate of return is given. Average market risk premium is given. Okay, so risk premium directly is given. You have to multiply it with this at plus 8.5. Okay, now we have to calculate estimated weighted average cost of capital of RST. Okay, so how do we calculate it? First we have to calculate equity. Okay, debt, how do we calculate? 11 minus 30%, right? 30% was the tax rate, so it is 7.7 is your debt. Okay, and equity, how do you calculate equity? 1.36 into market premium is directly given into 9 plus 8.5, right? So 20.74 is your equity. Okay, into what? Into 125 divided by 165, right? I'm getting an amount of 15.71. Okay, so I'll M plus it. Next we do for debt, 7.7 into 40 divided by 165. Okay, it is 1.86. M plus MRC. I'm getting it as 17.58. Okay, 17.58 is my cost of overall capital, right? So weighted average cost of overall capital is 17.58. Okay, see, 17.58. Next, what they have asked is EVA of the RST Limited. So how do you calculate EVA? It is NOPAT minus your invested capital into WACC, right? So what is my NOPAT here? NOPAT should be, is not given in question. NOPAT is not given in question. Only PAT is given in question. So if PAT is given in question, you have to do reverse calculation, right? So 25 lakhs into divide by 1 minus T, that is 0.7, right? So we'll get the amount as this. Okay, so this is the total amount. This is the PBT. Okay, plus we have to do interest. So 40 lakhs into 11% should be my interest, right? So this I'll add. Now how much do I have? 4011428 is my EBIT. Okay, minus I have to do in tax. Okay, minus tax, minus 30%. So 28 lakh 8,000 is my EVA. Sorry, 28 lakh 8,000 is my NOPAT. Okay, my NOPAT is 28 lakh 8,000 is my NOPAT. Okay. Now I have to do, what is my WACC? It is 17.58 into my invested capital. It is 165. Okay. Minus MRC. I'm getting it as 92,700 minus. Okay, 92,700 minus I'm getting, which means what? EVA is negative. Okay, the firm is not able to give appropriate return. So 92,700 I got total amount. Okay, it was very easy sum. Okay, so just keep the concepts in mind, you will be able to solve it. Next 21 question is your homework. Okay, it is very much easy, you can do it in homework. It is the same only. Okay, debt coupon rate 11% is given, 80 crores is given. They have just multiplied it by 2. Okay, so that is the only thing here. Okay, after tax cost of debt, sorry, after tax net income after tax is given as 50 crore. Okay, same reverse calculation you have to do, and asset beta is given here. Okay, so this is a good question. Okay, I'll just solve asset beta here. Okay, first we directly had equity beta, now we have to solve asset beta. So asset beta, how will you solve it? See, this is the only different point in here. Okay, so we'll solve it. Okay, just that one part, so that you will be able to solve it better. Okay, when you solve it on your own. So what is asset beta? Question number 21, right? So what is your asset beta? Asset beta is equal to beta of equity into weight of equity plus beta of debt into weight of debt, right? So while we do asset beta, we'll take tax effect in the weight part, right? So asset beta is how much? 1.11. Beta of equity is not known, into weight of equity is known. What is weight of equity? Weight of equity is 250 divided by 250 plus 80 into 1 minus t, right? So 0.3 plus beta of debt is 0, always 0, and weight of debt. Okay, weight of debt should be 80 into 1 minus t divided by 250 plus 80 into 1 minus t. Okay, so I am not writing it there because it is multiplied with 0. The answer will always be 0. So if I solve it, my beta of equity will come to how much? 80 into 0.7 plus 250, 0.816, 0.817, 1.11. Okay, so beta of equity is how much? 0.817. I am getting it as 1.36. Okay, 1.358, 359 or 1.36, right? Beta of equity. Now we can solve it average. Okay, so we got beta of equity as 1.36. So 1.36 market risk premium is directly given in question. So 1.36 into 9 plus your risk-free rate, it is 8.5, right? So 20.74 is my beta of equity. Sorry, KE. Okay, so now we have to find what? Now we have to find calculate EVA of the firm. Okay, so to calculate EVA we need KO also. So 20.74 is my cost of equity. Okay, into my this thing 250 divided by 330. Okay, here we'll take total amount. In because in debt we will take tax effect, right? So tax is how much? 7.7 after deducting tax. Okay, into how much? 80 divided by 330. So I'm getting it as 1.86 plus same I'm getting 17.58 only. Okay, 17.58 is the answer I'm getting. Okay, this is my cost of capital. Okay, into divided by 100 into my invested capital. Invested capital is 330, right? 330. So 58 I'm getting. Okay, 58.01 I'm getting. This is what? This is my invested capital into KO, right? So I need to find out K NOPAT now. So how do we calculate NOPAT? NOPAT is 50 crores divided by 0.7, 1 minus T. Okay, this amount I'm getting plus my interest. Interest is how much? Interest is 80 into 11%, right? So this is my EBIT minus I have to do tax. So 56.16 is my NOPAT. Okay, minus 50. So 56 is my 56.16 is my NOPAT, right? 56.16 is my NOPAT. Now we have to calculate 330 into 17.58. Okay, 58.014. Okay, this is a negative only. How much negative? It is 1.854, right? 1.854 crores is the answer. Okay, or they have told us to present in lakhs. If you want to present in lakhs, into 100, right? So it is 185.4. okay, lakhs. So this was the basic thing. It was asset beta was given here. So asset beta, you need to know how to solve it. Now question number 22 is easy. Okay, so what is the different point here? It is you have to remember the formula. What is the financial leverage formula when EBIT is not given? Okay, when financial leverage is only given, so what do we do? Financial leverage into interest divided by financial leverage minus 1. So here if you see, what is the interest amount? Interest amount is 40 lakhs, right? So what is the financial leverage? 1.5. So 1.5 into 40, right? M plus, okay, divided by 1 minus T. So 1 minus financial leverage, so 0.5. So my EBIT is how much? 120. Okay, my EBIT is 120. Now we have to find economic value added. So minus 30% if I do, I'll get what? I'll get NOPAT. Okay, so 84 is my NOPAT. 84 is my NOPAT. Keep that in mind. Now we'll calculate invested capital. Okay, invested capital is how much? 160 plus 140 plus 400. It is 700. Okay, my invested capital is 700 lakhs into my KO. KO is given in question. No, it is not given in question. We have to find it out. Okay, so 14 we'll take directly. Okay, 10 should be minus 30%. It should be 7. Okay, so 14 into how much? 140 plus 2, it is 300 into 300 divided by 400. 10.5 and 7 into 300 divided by 700 into how much? 14% and 7.7 into 400 divided by 700. So my cost of capital is 10.40. Okay, my cost of capital is how much? 10.40. Here they are getting, why they are getting in 0.10 only? See, 14 into 300 divided by 700 and 400 divided by 700 into 7. So it is 10% only. Okay, so 10% is my value of cost of overall capital. So what is my total capital? 700 into 10% plus minus 84, right? We calculated earlier. It is how much? 14 lakhs is my EVA. It is very much easy. Just remember the formula: FL, financial leverage into interest divided by financial leverage minus 1. Okay. Now next we'll move on to the next question. It is question number 23. Okay. So the following information is given of 3 companies that are identified except for the capital structure. Okay. Only capital structure is different. Rest all is same only. Okay. So we'll just solve for the orange part. Okay. So it is easy question only. Okay. I'm not solving it. You can solve it on your own. Okay. It is very much easy. Next we have is question number 25. 24 is also very much easy. You can do it. Okay, I have cancelled it already here. What it is, we'll see. Okay, tender has earned net profit of 15 lakhs after 30%. Okay, so this we should do reverse calculation. Interest cost is given, invested capital is given. Okay, the company maintains weighted average cost of capital at 13%. Okay, we have to find out operating income. Operating income is how much? 15 divided by 0.7. Okay, and operating income plus interest will get, taxable income plus interest will get 31.42857, and EBIT into, that is your NOPAT. We have to calculate NOPAT here, minus tax. If we do, NOPAT will get, okay, minus 13% into 95 lakh. What is 95 lakh? It is your total invested capital. So 22 minus your invested capital into WACC is equal to 9.65. Next they have asked here is how much dividend. So this is the only different point here. Okay, EVA dividend is how much? 965 divided by total number of shares. It is 6 lakh. Okay, where it is given 6 lakh. In the second point, in the C point, they have given the 6 lakh equity shares. So divided by that, we'll get the answer. Okay, it was very much easy. So question number 25 is also easy. You can solve it on your, it is your homework. Next is question number 26. It is also easy. Okay. Only question number 27, 28 and 29 is hard, I guess. Okay, we'll see what it is. Now in this question, Herbal Gyan is a small profitable producer of beauty cosmetics using the plant aloe vera. This is not a high-tech business, but herbal earnings have averaged 12 lakhs after tax, largely on the strength of its patented beauty creams for removing the pimples. The patent has 8 years to run. Okay, the patent has 8 years to run, and the herbal has offered 40 lakhs per annum. Sorry, wait, there's a camera right. Herbal assets include 20 lakhs of working capital and 80 lakhs of PPE. Okay. The patent is not shown on Herbal's books. Okay. Which means what? Intangible assets are not shown in the books. Okay. So we will add it when we'll calculate invested capital, right? So suppose Herbal's cost of capital is 15%. What is the EVA? They are asking. Okay. So it is a very easy question. Okay, so we just have to find out EV. So for finding out EV, what is the primary thing you require? Okay, so first one is your NOPAT, right? So is there any information given? Herbal earnings have averaged around 12 lakhs after tax. Okay, so what they are saying is that PAT is given. Okay, earnings after tax is given, that is 12 lakhs. Okay, so we have to bring it to EBIT. So how we will do it? Divide by what is the tax rate? Tax rate is tax rate given here? Since there is no debt, okay, so we will assume that it is the total amount. Okay, so 12 lakh profit after tax we are taking. We are finding out economic value added where in a firm where there is no debt. Okay, so we'll assume there is no debt. Okay, so we need not do anything now. Next we have invested capital into KO. Okay, KO means your KE only. Okay, so cost of capital is 15% is directly given. Okay, the patent. Okay, so now what we have to find is the invested capital. Okay, what is the invested capital? It is PPE, that is 80. Okay, plus my 20 lakhs of working capital, my total assets minus my total liabilities. Okay, but there is no liability given, so plus 40. Okay, why we are adding 40? The patent has 8 years to run. The Herbal has been offered, and Herbal has been offered 40 lakhs for the patent rights. Okay, means what? 40 lakh is the intangible asset, right? Patent is your intangible asset. The patent is not shown in the Herbal's book. Means what? Intangible assets are not shown. Means it is not recorded in the books. So we'll add it. Okay. So 140 is my total invested capital. Okay. Into, I'll do 15%. Why 15%? Because 15% is the cost of capital. Minus no PAT. Since there is no tax or interest available with us, so we will directly consider PAT as the total thing, and there is no debt in the firm. Okay, so minus 12. So it is coming to how much? 9. Okay, so since it is minus 9. Okay, so 12 minus 21 lakhs we are doing. So it is minus 9. Means what? The Herbal is not being able to produce even that much amount that it cannot cover the required cost of capital. Okay, so it is more than that. So EVA is negative. Okay, so it was very easy. Okay, just one point was added here, that is your intangible asset. Okay, intangible asset which is not recorded in the books, we have to calculate. No, we have to take it to the asset value, right? So that's what was given here, so we have done it. Okay, next question number 27 we'll do. Question number 27 is a good question. Okay, we'll see what it is. Constant Engineering Limited has developed a high-tech product which has reduced the carbon emission from burning fossil fuel. Okay, so this is a startup company, we'll say. Okay, the product is in high demand. The product has been patented and marketed and has a market value of 100 crores. Okay, the market value is 100 crores, which is not recorded in the books. Okay, the patent of 100 crores is not recorded in the books, so we'll take it with the total assets, right? So the net worth of Constant Engineering Limited is 200 crores. So 200 crores plus 100. Okay, so what we used to do, total assets minus total liabilities, which gives your net worth or your book value, or your net worth plus your patented value, right? Your intangible assets will get total invested value. Okay, this is my total invested value. Wait a minute. My invested value will also include my long-term debt, right? Because we'll take first what? No PAT. No PAT means what? EBIT minus your tax, right? So this figure is also very much important for invested capital, right? So plus 400. So how much is my invested capital? Till now that we have read the question, it is 700 crores, right? The product generates a revenue means what? It is saying profit. Okay, 84, they are saying it as profit. Okay, profit is 84. The rate on 365 days government bond debt is 10% per annum. Okay, so what they are saying is that there is a government bond, okay, 365 days, that is 1 year, and its rate of debt is 10%. Okay, now why is this information useful? We'll see. The market portfolio generates a return of 12% per annum. Means what? The market portfolio means your Nifty 50, right? Your Nifty 50 becomes your market portfolio. What is a Nifty 50? Nifty 50 is the top 50 companies listed in the listed in the NSE, right? Nifty 50 is of NSE. So top 50 companies listed in the NSE, it acts as a portfolio, right? So that portfolio generates a return of 12%, right? So this is RM. Okay, this is RM. The stock of the company moves in tandem with the market. Means what? Our stock, that is Constant Engineering Limited, moves in tandem with the market. Means what? It moves with the market. Means what? Its beta is 1. Right? It moves with the market. If the market goes up, it goes up. If the market goes down, it goes down. Means what? It is beta, right? So beta is 1. Okay, calculate EVA added of the company. Okay, very much easy. We'll see what it is. Now we'll get let's suppose we'll get 12 minus 10, that is RM minus RF, into beta, that is 1. Okay, plus your interest free, that is 10, risk free, that is 10. Your KE is 12%, right? So but here long term debt is also given, but there is no KD available here, there is no interest rate available here. So what we'll do, since there is no interest rate available here, we will assume that the rate on 365 days government bond, that is your RF, to be your long term debt interest percentage, because there is no way that we can find out this amount, right? So this is the last resort. We will take 10%. Okay, so 10% is what? 10% is a total thing, but we'll take it what? We'll take it pre-tax, sorry, post-tax. So what is the post-tax amount? So tax amount is not given here, right? Is there anything related tax given here? There is no tax given here. Okay, so we'll just do 10 as whole. Okay, so 10 into, now we are finding out KO. Okay, why? Because we need to find EVA. For EVA we need invested capital into back, okay, minus your NOPAT, right? So 10 into what? Into 400 divided by 700, right? And 12 into 300 or 200, wait a minute, yeah, 12 into 300 divided by 700, because we have calculated invested capital here. Okay, so I'm getting it as 10.857. okay, so 10.857 I'm getting. Okay, 10.86 I'm getting. Okay, now what we'll do, we have gotten what? We have gotten this back, right? So here one important thing you have to keep in mind is that your invested capital is what? Invested capital is your long-term debt plus your equity capital, okay, plus other adjustment. What adjustment? It is your patent adjustment, right? It is your patent adjustment. Okay, it will also form part of your invested capital. Okay, because total assets minus total liabilities forms your thing. Okay, if in total assets your intangible asset was not included, then we'll add it. No, it's basic simple logic. Okay, so that's why we have taken it. Okay, so divide by 100 into 700 minus what? Minus your revenue of 84 crores. Okay, since there is no tax given here, wait a minute, we can get it, right? We'll see. Okay, now 84 crores is what generates a revenue of 84 crores. Okay, there is no tax, we'll take directly. Okay, since there is no tax value given here, and this profit, the product generates a revenue profit as 84 crores, we'll give an assumption that we have taken this as the NOPAT. Okay, so 84 minus what? 75.99 something, right? So 10.85 into how much? 700 minus your 84. Okay, so I'm getting it as 8.05. okay, 8.05 crores. Okay, so this was easy question only, but just one assumption you should have taken, that is you should take is that it's the 10% government bond, we'll assume it's the long term debt. Okay, interest rate. Next we have question number 28. It is based on reverse calculation. So what it is, we'll see. It is a good question. Okay, it is a good question. It will come for roughly 5 to 6 marks in your exams. Okay, or maybe even for 4 marks if your luck is very bad. Okay, so how should we solve it? We'll see. Okay, question number 28. We'll move on. Fragrance Limited as reported. So what you should keep in your mind while solving this question is that, what is my advice is that keep calm and write. Okay, keep calm and write the solution. You will get the answer. Okay, you will write it perfectly. Okay, just write it down. Okay, so what it is, we'll see. Fragrance Limited has reported a net operating profit after tax. Okay, NOPAT is directly given in question. Or is it given in question? No, it is not given in question. Has reported the NOPAT to invested capital. What is this? Question number 28, right? It is a good question. So NOPAT to invested capital is how much? Is it? It's 2.5% plus weighted average cost of capital. Okay, plus my KO. Okay, so this is an equation they have given us. Okay, plus WACC. Okay, plus WACC for the year ended 31st March. EVA is given us as 4 crores, right? EVA is given as 4 crores. You are required to find the amount of invested capital, NOPAT, if WACC is 10%. Okay, first we have to find invested capital. The first part we'll solve. Okay, how to solve it we'll see. Okay, we don't know anything now. It is a weird information given in the question. We have to write it to find the answer. Okay, so what is EVA? EVA is equal to NOPAT minus your invested capital into your WACC, right? This is the information. Okay, so what is given in question? Only EVA is given, that is 4 crores is given, and NOPAT is given. Fragrance Limited has reported net operating profit after tax to invested capital as 2.5% plus weighted average cost of capital. Okay. Now, using the same information, we can also write NOPAT as NOPAT is equal to invested capital into 2.5% plus WACC, right? So we'll do that only. Okay, so what it is, invested capital, we are just finding out a way to solve it. Okay, into 2.5% plus WACC minus invested capital into WACC. Okay, so what it is, 4 is equal to invested cap 2.5% plus IV into WACC, okay, minus IV into WACC. Okay, so plus and minus will get cancelled, right? IV into WACC plus was it, and here IV into WACC minus it was given, so I'll cancel it out. Now what is invested capital? 4 divided by 2.5%, that gives me what? That gives me invested capital is equal to 4 divided by 2.5%, it gives me 160 crores. See, if you write it down, you'll get the answer. Okay, now second part, NOPAT. If WACC is 10%, okay, NOPAT is what? NOPAT minus invested cap is how much? 160 into 10% is equal to 4, right? So 160 into 10% is how much? 16. NOPAT is equal to 4 plus 16, that is 20. 16, okay, it will go this side, it will become plus, so NOPAT is 20. Is it 20? Yes, 20 crores. Okay, it is 20 crores. Okay, yes. So yeah, the question was reverse calculation, but yeah, it is a good question. Solve it once. Now we'll move on to question number 29. Question number 29. Following is the information of Messrs. DY Limited for the year ending 31st March 2025. Okay, DY Limited is our thing. Sales is given as 1000, operating expenses including interest. Operating expenses including interest is 620. Okay, what is the interest amount? We don't know. Now, debt 8% is debentures is 250 lakhs. So this should be the amount included in it. So how much is it? 250 into 8%, 20 minus 620. So 600 is my operating expense. Okay, we have to deduct it first. So 1000 minus 600, 400 is my EBIT, right? Next, I hope there is no other information given here. Okay, 8% debentures is given. Next we have is the equity share capital, face value of rupees 10 each is given. Okay, as 250 lakhs. Okay, fine. Resource and surplus is given. This can be used for finding net worth of the company, right? That is the invested capital. These three will form my invested capital. Next, market value of DY Limited is 900 lakhs. What is market value? It is your equity shares, number of shares into the market value of the shares, right? So why is it given? We'll see. For market value. Okay. Next, corporate tax is given as 30%, risk-free rate of return 7, RM is 12, equity beta is 1.4. Okay, equity beta is given. So first, what you have to find is weighted average cost of capital of DY. So to find out weighted average cost of capital, we need what? We need KE and KO. So KE is given in question. No, it is not given in question. KD is given pre-tax. So we'll do post-tax. 8 into 8 minus 30%. So it will come to 5.6. Okay. Next, we need to find is KE. What is KE? KE is the market rate of return is 12 minus 7 into 1.4 plus 7. So it is 14%. Okay, 14 and 5.6% is the rates we have. Now 14 into how much? Now we have to give weights to it. Okay, so 250 plus 250, right? So total we have 750 capital. Okay, 250. So 500 divided by 750. So I'm getting it as 9.33 M plus, and for the next part 5.6 into 250 divided by 750, I'm getting it as 11.20. Okay, my KO is 11.20. Weighted average cost per capital is 11.20. It is very much easy, you can skip it. Next we have EVA. Okay, what is EVA? EVA is your NOPAT minus your invested capital into your back of the company, right? So we have WACC, we have invested capital. What is invested capital? It is your debentures, equity and resource and surplus, right? So how much is it? 750. So 750, are we going right? Yes, there is no any other information given. So 750 into 11.2%, I'm getting it as 84. And what is my NOPAT? Now we have to find out NOPAT. So 1000 minus 600, okay, minus 30%, I'm getting it as 280 minus MRC. So my EVA is 196 lakhs. Okay, my EVA is 196 lakhs. It was very much easy. Now we will find out market value added. Okay, MBA will find out. So how did I do EVA? Okay, so it was sales minus operating expenses including interest. No, so minus interest portion we deducted. So 400 was remaining. Okay, 400 minus tax value added. Okay, I got NOPAT minus invested capital 750 into 11.2%. I got the answer, right? 196. It is very much easy. So market value added. So how do we calculate market value added? It is the market value of the firm minus your invested capital, right? So 900 minus your 750. So 150. So 150 should be my MBA, right? It was very much easy. Okay. So yep, that's it. That's it for question number 29. Question number 30 is easy. Okay, we have to just look at one adjustment of star part. Okay, so for that we are doing this question. Okay, and then we have question number 31 and question number 32 also I'll solve. Okay, it is just one question, but we'll have some other miscellaneous topics to discuss. So with that, I'll solve question number 32, and we'll solve some additional questions also. Okay, behind there are some additional questions given by Ajay Agarwal sir, so we'll solve that too. But first we'll do question number 30. Okay, so 30 and 31 is the last questions that are remaining in this lecture. Okay, we'll do what? Okay, we'll do it. So question number 30, we have compute EVA of A Limited with the following information. Okay, compute EVA of A Limited with the following information. Okay, so revenue is given as 1000, direct cost, okay, profit and loss statement and balance sheet is given side by side, all figures in lakhs. Okay, so nothing out of the ordinary. Okay, so everything is pretty much fine. Okay, so nothing to be worried about. We'll see the next part. Assume bad debt provision of 20 lakhs. Okay, so bad debt provision, if you remember very nicely, in question we had non-cash expenses, we added back, right? So this provision for bad debts is a non-cash expense, we will add it back. Okay, we will add it back. So no PAT plus this amount. If I want to show it here, see, EVA and MVA, non-cash see, asset side, how do we calculate it? Total assets minus current liabilities plus intangible asset plus non-cash adjustment and no PAT. Okay, provision for bad debt, we have to add it because it is a non-cash expense. No cash has been gone from my hand. Okay, this is a non-cash expenditure. It has not yet occurred yet. Okay, it has not yet occurred. Okay, so there is no point in deducting that. So we'll add it back. Okay. Also assume the pre-tax cost of debt is 12%. Okay, so we have to do minus 30% now. So 12 minus 30% is equal to 8.4%. Next we have cost of equity. Cost of equity is 8.45%. They have given directly in the question. Okay, very good. Also calculate MVA if current market value of the firm is 1000 lakhs, right? So first what you need to find is EVA and then we'll do MVA. Okay, for MVA, the question is given. Okay, so 1000 minus your invested capital will be your MVA. It is very much easy. We will find EVA. Okay, EVA, how do you find it? We'll see. Okay, so there are two methods. The first one is your balance sheet method. Okay, and the second one is your liability side method. I find liability side method as very much interesting, so I'll do that. Okay, 700 plus 100 plus 100. Okay, I'll not take current liabilities. Okay, it is current year's expense. My invested capital is includes my debt also. So debt plus my shareholder funds. So it is coming to what? It is coming to 900. Okay, 900 lakhs is my 900 lakhs is my invested capital. But there is an adjustment given in the question. Means what? Plus assume bad debt provision of 20 lakhs is included in the SGA, selling and general admin expenses. Okay, selling and general admin expenses is included there also. Okay, here selling and general admin expenses, because we give double effect, so here also it is added. Okay, here also it is reduced. So we'll have to look into this part also. We'll add here also 20 rupees. Okay, we'll add here also 20 lakhs. Now here we have to add 20 lakhs because the same amount is reduced from the trade receivables in the current asset. So it is less only. Now we have to add it. Okay, plus 20. Okay, I'll just show it in the asset side only. It will be very much, you'll understand it better. So 1000 plus 300. Okay, since from 300 this 20 lakhs is reduced, we'll add another 20. Now you understood? Yes. 1320 is my invested capital. Okay, now what is my back? My back should be shareholders funds so should be divided by 1300 or 1320 is the doubt arising in our brains. So Okay, we did not do minus current liabilities, right? That is 700 plus 100 plus 100, okay, plus 20 we were doing, no. So here always do double check, okay. Don't be in a haste and just look at one side, okay. So 920 is the invested capital, okay. But when we calculate WACC, while calculating WACC, this invested capital should not form part of it, because invested capital was given by the US firm, okay. This EVA was given by the US firm, okay. But WACC is a general concept, okay. In general concept, we'll just take the total value issued, okay. So we'll just take this part, okay. 700 plus 100 plus 100, okay, not 20 lakhs extra, okay. Did you understand? I'll explain it to you again, okay. I'll repeat again. So what it is, that WACC is not given by US company steward, okay, whatever the company, okay, US based company, they did not give, okay. WACC is a generalized formula, it is a universal formula, okay. So why do we calculate WACC? Weighted average cost of capital, okay. So what is the cost of capital? What is my capital? This is my capital, okay. My bad debt, okay, my bad debt will not form part of my capital, right? My bad debt, provision for bad debt will not form part of my capital, okay. It is a non-cash expenditure, we will adjust it for invested capital, okay. But this should not be added in our invested capital, okay, in our capital employed. So what we'll do is that 8.4 into 100 divided by 900 and plus K is given 8.45 into 8.45 is 8.45 into 800 divided by 900 M plus MRC. I'm getting it as 8.44%, right? 8.44% is my WACC. So into 920, okay, for a US based company, plus what, sorry, minus my NOPAT. NOPAT we did not calculate yet, okay. So what is NOPAT? EBIT is given, okay, 410 minus what is the tax rate? Tax rate is 30%, minus 30%, minus MRC. Wait a minute. Who are you? What is NOPAT? So what is NOPAT? NOPAT should be your EBIT minus tax, right? Okay, so we did not add back here. Okay. So there was a double effect given here, right? There was a double effect. We will not just deduct it from current asset. We will also deduct it from P&L also, right? Double effect. So here it was already deducted. So we'll add it back. So what is the thing? 410, okay, minus. We'll do plus here only, no? Should we do plus here? For adjusted NOPAT, what was the formula given? See, this is where we make mistakes, so keep that in mind, okay? EVA, NOPAT, calculation of NOPAT. Okay, first we have to do tax, then we have to add non-cash expense, okay? Just keep this in mind, okay? Follow concept notes blindly. So 410 minus tax 30% plus how much? 20, right? So it's 307, right? So the logic behind adding it afterwards, why did we add it afterwards? Because this is a non-cash expense, okay? Why should we give tax benefit to a non-cash expense, okay? So why should we give tax benefit to a non-cash expense? Do you give tax benefit to a depreciation? No, right? So like that also, here you need not give tax benefit to a non-cash expense, okay? There is no cash outflow. So why are you giving tax benefit? No tax benefit should be given, okay? So that's why we are adding it afterwards, okay? So that was the logic behind it. Okay, we'll M plus it. Now what? 920 into how much? 8.44% minus MRC. I'm getting it as 229.35. Right? Yes, sir. We got it right. Right? So next we'll do question number 31. There is no marking here. Okay, we'll see what it is. The following data pertains to XYZ incorporations engaged in the software consultancy business as on 31st December 2025. Income is given, EBIT is given, interest on loan is given, EBT is given, tax rate is given, balance sheet is given. Okay, so is there any different point here? See, computers and softwares, intangible assets. Software is your intangible asset, right? Not really. Yeah, which you cannot touch or feel, right? So yeah, it is recorded in the books. So we need not do anything there. So directly EVA we have to calculate. I have written here easy, so it should be very much easy. So what is my EVA? EVA is 100 plus 325 plus loans. Yes. 605 is my what? 605. Long-term loan we take it only. Okay. Long-term loan we take it. So 605 is the invested capital. Now what is my KE? Is KE given question? KD? KD is given, not given in question. Tax 35% is given. So EBIT minus tax we do. Okay. We'll find out back later. Okay. EBIT is how much? 180 minus 35%. I'm getting this 117. Okay. So 117 is my NOPAT. Now what we need to do is we need to find out EVA. So what is my invested capital? Okay, back is given in the required part. So 12% back is given. Okay, so 605, right? We'll verify 100 plus 325 plus 180 into 12% minus my WAC 117, right? So 44.44. Okay, it was very much easy. They have given back in the required part. Next, the share market value added. Now this is a good point. Okay, we'll see what it is. The share of a company are currently quoted at $50 each. Okay, the shares of the company is currently quoted at $50 each. Okay, so now what? 100 into 50. Now this is my MBA minus my value added. It is 605, right? Wait a minute. 10 into 50, right? So 10 million shares into 50. It is 500 minus what? Minus 100 minus 325 minus 180. I'm getting negative 105. But it is not good. Now here is the catch. They have asked us share of the company is currently trading. Okay, they have given just share value. Okay, not market value of the company, just share value. So should we deduct tax there? Sorry, should we deduct loans there? No, we cannot deduct loan there, because when in question equity rate is given, see, if market value of equity shares is given in question, okay, market value of equity share is given in question, market value of equity share MPS into number of equity shares minus shareholder funds, equity shares plus reserves and surplus. Okay, this you have to keep it in mind. So this was the special point in this question. Okay, so how much is it? 50 into 10 minus 100 minus 325. It is 75. Okay, so keep this in mind. So that's it for today. Okay, that's it for today. We have completed the EVA, MVA, and your other parts of this business valuation chapter. Okay, only one question is remaining with the other topics. We'll cover it in the next lecture. Till then, tata, bye bye.